Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello everyone, looking at SPY on the daily, weekly, and 5-minute time frame. So we started off looking good. The bulls were strong today, certainly stood out compared to all the weakness we've seen, but by the end of the day, the bears took back over. Bulls clearly did not want to hold into the weekend, and here we are rejected by the lower Bollinger Band resistance, and that has now been resistance 4 days in a row. Lower highs and lower lows continue. We broke the low of yesterday fairly early on, and we only closed a few pennies above the low of the day. More like a dime or two, but you get the idea. So technically, you could look at this as an inverted bullish reversal hammer. It is a very weak bullish reversal candlestick. We would have to see a lot of turnaround early next week to be looking to the upside, but we know we're oversold. This is the most oversold we've been in, I think it was 10 months the last time the RSI was this level on SPY and the S&P 500. But the bears are still in absolute full control, and there is no doubt about that. We've lost key support here. We got rejected from the 10-week moving average resistance multiple times, and the bottom fell out. So we're looking at the 50-week moving average of 205.01 and the 100-week moving average of 202.59. And we've been watching SPX on the weekly due to the 10-week moving average very clearly rejecting the price 5 out of 6 weeks before the bottom fell out. And the fact that we didn't hold 2100 here at all definitely shows weakness. I was watching this level as resistance, and we rejected from it 10 times, and that was the level to get above for the bulls to hit new all-time highs. And as soon as they broke it after Brexit, we saw 6 weeks of just straight up bull move. So the fact that we didn't hold that on the first backtest, the fact that we're seeing increasing bearish volume, we're looking at the 50 and 100-week moving averages in the 2070 range, and then we're looking at the Brexit low if those levels are lost. We are still maintaining higher lows and higher highs as long as the Brexit low can hold. Otherwise, the long-term trend is in trouble. Looking at SPY on the 5-minute time frame, there was a lot of trading opportunity today. Started out with a rejection right around the 200 period 5-minute moving average resistance pre-market. That set our resistance at 209.32. Then we formed a quick dump right out of the gate. We held the 100 period support, bounced, rejected from the 200 period resistance, and then we hit a new low, and this broke the low of yesterday. So that set the tone in terms of the day being unable to hold the low of yesterday. Then the bulls did show up, and the clear signal the bulls were showing up, we have the clear lower high pattern. As soon as the 200 period 5-minute moving average became support, we knew it was likely the bulls were going to break out, and we did get a move up to 209.35 on that candlestick, which did break the high of pre-market, and it was also when oil spiked big time on oil dumped pre-market on rumors, and then news came out that the rumors were not true. Don't even get me started on these rumors and social media with these moves. But that's what went on with oil, and finding out the rumor wasn't true is what drove oil spiking to the upside, and that's exactly when SPY made the bullish break. So then SPY saw upside for the next hour and a half, and we knew to be looking bullish. Look at these back tests of the 20-period moving average support. Held it for a half an hour in a row before breaking to higher highs. Then we started to get toppy. We had resistance of 209.89, and then a double top, 209.88. And then from there, we just formed lower highs and lower lows. So as soon as we hit 209.89 and 209.88 and then pulled back and broke the low of this previous consolidation of 209.64, at that point we have a lower high and then a lower low. And then from there it was just another lower high, another lower low, another lower high, and then the dump. So the lower highs and lower lows started showing up before the all-out dump occurred. And then that dump lasted almost 2 hours into the end of the day, increasing bear volume right at the end, and the bears asserting their strength. So there was a bull trade to be had there after the 200 period resistance, and then a bear trade with that double top and lower high, lower low pattern that played out. It almost looked like a little bearish reversal head and shoulders, neckline breaking, and that is that. So we'll see what next week brings. We know the bears are still in full control. They need to prove to us that we're going to see a bounce. They proved it first thing, but they couldn't hold on to the end of the day. So this bounce was short-lived and just a day trade. So we'll check in on Monday again. I appreciate you watching. Have a great weekend.